All right, so this is the fourth class. So yeah, now first thing I want to talk about, we've spoken about structure, being that we spoke about strong eyes, then your liquidity, then this. There's something I did not really still talk about the last time. You know, when I said, I think I spoke about the chart. A valid A gives you a sweep before your break of structure to the downside. And your B, even though is a complete pullback, even though your B is a complete pullback, you should still expect something like this to happen, even though it's a complete pullback. Now, but there are other criteria you need to now use to enter from here, because you must be sure that there's an imbalance. That's what we're talking about now. So then if you did not have a complete pullback, you obviously have a 50% still above here, and definitely leaving imbalance here. Price needs to come back and take it out. So this one, you'll be so sure that this is liquidity. But this, you need a confirmation of a fresh level here or an imbalance in price to tell you that, okay, this is going to happen, because sometimes this might happen. Price might just, take out your structural liquidity and push to the upside and drop, taking this as liquidity, not this. But this one, you already confirmed that is liquidity without stress. You already confirmed that is liquidity, but this one can be used. We'll talk about it, but just take note of the difference. There's something I still did not touch, which I want to touch before I go into imbalance quickly. Now, if price gives you your valid A, right, and price continued without giving you a valid pullback, remember I said that your low is not valid yet. Your low, yeah, remember that, okay. Then if price continues without giving you a return back into your 50%, for example, and gives you this, right? Price gives you this, and now price later came and gave you this. What is this price action telling you? That there's already a money transfer from here to here. That means there might be something in the past that made price to transfer from here without coming back to the original zone. This has already told you that, okay, your next price action, would you expect this? Would you want to sell from here? No, we don't trade that way. You wait for inducement again, your P point, and you wait for this to be taken out like this. I hope this makes sense. So even though later on price might come into a larger zone and come back to your this and take out, that does not concern you. But because price did not give you a valid retracement, does not mean you should just leave the market when price has given you a transfer here and you should enter from here. I hope that makes sense. Now, another thing that you need to still also take note of, because before I go into imbalance, so that you guys will not ask a lot of questions, is that there are some things, there are some criteria that these are kinds of transfer, even though you don't have a normal transfer. Let's say it gives you a valid A, then your B point gives you a transfer. This is a transfer. Another kind of transfer is if price gives you an inducement, do as if he wants to sell, right? It does something like this and now fit out into your PY. So let's say this is your sweep, your break. So a lot of people want to sell it here, right? Please, are you out there? A lot of persons wanted to sell it here.
Yeah.
Because of this protected eye and everything. But there's an upper PY here. This makes this to be a money. This is a money transfer that we own. But this one is another money transfer I'll show you now. That money are transferred from here to here. Then another kind of money transfer again. Let's say price gives you let's say something like this. This is similar. Something like the trend line liquidity build up like this. And price now comes sweep it out, and come back here. So coming into this POI, can you see the two examples I'm giving? This is a money transfer. I get what I'm saying. But is this a money transfer? Guys, is that a money transfer?
No, sir.
Okay.
No.
All right. You are getting the story now. So what would you expect? You wait for price to come, give you an inducement, your B point, and this is now your money transfer. So cycle continues. So if price gives you this and does this, you should not be expecting, you should look for sales in this region. If price does this, you should look for sales in this region. I can show you some example. I think the V50 that we took, V51S, it's this second example that happened there. This second example that happened there. Okay, so I just needed to ship this in so that you guys get what I'm doing, okay, so that you don't get confused. Now, we'll talk about imbalance, mitigation block, violation, mitigation block or violation block, and breaker block we'll talk about, and combining it with structure, okay, because structure is everything, like I said. So, like I normally say, please, are we following? Before I move forward,
Yes, sir. Yes, sir. You're following me.
how many of you took the signal I sent to the group?
Follow.
Which particular one, sir?
The V91S, let me check what it's currently doing. Okay, stay in profit. You can see the trade. You can see there it's playing out. You can see them. So nobody took it. V90. What about V51S that hits TP? Did anybody take it? Me now, if I don't really used to hold students send your results, all those things again, because the truth is, if you're making money for yourself. That's the truth. Okay, so but I like seeing results because it motivates me to do more, you understand? So, all right, without wasting much time, please, I believe you guys can hear me very well. I believe so.
Yeah, your voice is clear.
All right, so imbalance. Now, this is what we mean by imbalance in price. For example, price gives you A point, this is your A point, for example, gives you a B, and you are expecting this to happen, expecting this to happen normally to get to your, this is your C, this is your B, and this is your A. Okay, now imbalance in price is if market does this in your A point, for example, market gives you a small, now what makes up a market is when there are buyers and sellers. So every time you see a very impulsive move telling you that it's just as if it's only sellers that are in this region, that's what we call imbalance. All those large candles kind of vibe. And so let's say this is your A point. There's an imbalance. This is your imbalance. Now price gives you a valid A and B, right? Leaving an imbalance. This imbalance, because of this imbalance, you know that price is going to balance it. Because it's imbalance, price is going to balance it by coming back into your imbalance and sell. I hope this makes sense. For the sell scenario, it's something like, for the buy scenario, it's something like this: imbalance of price and push. Now, this is for the first scenario. The second scenario, whereby we have imbalance. Now, let me invert my scale back. So now, price gives you this. Do this. Gives you an imbalance, push to the downside, gives you by something like this. But now, price gives you an imbalance here. Your large candle and your small candle, stuff like this. Price now comes, right? Gives you this, right? And gives you this. Came into your imbalance and give you another imbalance before pushing to the downside. Now, would you take would you take this eye as your main eye or this eye? You would take this one, obviously, because money have been transferred from this into this, and in this smaller time frame region. You will not be taking this eye as your protected eye again, as your new A. You'll be taking this because there's already a money transfer here, leaving this imbalance. So what will you expect? This and price will come back here and sell. This is basically imbalance. Imbalance is basically a large volume area where it seems as though it's only sellers or it's only buyers that are in the market, because the market consists of both buyers and sellers. But when something like this happens, price tends to rebalance it by filling it and drop. I hope that makes sense. Any question on this before moving to breaker block? Now, another thing we check in this imbalance area is your indecision candles. So if you see in your A point, let me show you. Let's say this is your A point, the value sweep break. Now you see an indecision candle. Take note of that indecision candle. You can map it out and sell all the way down. I hope that makes sense. So I'm giving you entry styles, what to look out for in your A point now. Either look for an imbalance or look for indecision candle. I hope is that clear? Only 4 persons in this class. I was supposed to be like around 10, 11, but only 4 persons. Is that right? Okay, so this is what you look at. Please, do you get the imbalance and indecision candle area? If we get it, let me move to the next. We have a lot to touch. We have a lot. I never even started the confusion yet. We have a lot to touch. So any question, let me move to the next.
Sir, please, can you touch the imbalance and the decision block again? Indecision candle.
Okay. All right. So I said when price gives you your valid A, right? Your valid A point, sweep, break, and everything gives you this. Let's say this is an incomplete pullback. This place, what you check for in this region is your imbalance. Now, imbalance is when a large candle prints out. A market is supposed to consist of both buyers and sellers. Now, this is just saying that there is a lot of sellers here without buying. So the market will come and mitigate, balancing it, rebalance. So these are called rebalance, and that price will move back. That's just the concept of imbalance. Now, I made another example citing a situation whereby money transfer as a result of an imbalance. So this is an imbalance. Let's say this is an imbalance. Price came, you sold from here nicely. So this is a money transfer. Now, before this break of structure, another money transfer happened again. Transferring this imbalance. This imbalance was now filled, giving you a new imbalance here. That's what I'm trying to explain. Now, before that break of structure, before your B point came, what will you do? Will you be taking this as your new high and your range? No, you will take this one because money has been transferred from here to here. Because what this was taking out liquidity and this, so market will do this and drop, enter into your imbalance and drop. Now, another thing you check for in your A point area is your indecision candle. What is an indecision candle? A small candle body, large wick. You map it out. That is what you check for an A point. And you expect this. It's that simple. There's nothing much, there's nothing there. And you enter your trade. So that's what I just explained in those two instances. Now let's go to any question before I move to the next. Any question before I move to the next?
I'm okay. It's okay.
All right. Since there's no question, let me move to the next. Now we have mitigation block. What is mitigation block? Mitigation block, for example, everyone wants to do this because of this order block here. Everyone map out order block. So they will be expecting this to happen, right? But now what's the mitigation block? A mitigation block is when price comes into your order block and fails. But it does not just fail like this, like once, like this, no. This one is a breaker block. No, that's a breaker block. But this one comes into your order block, push up like though the thing won't go up, fake, induce a lot of people to buy it. Let's buy it here, and fail. How would that make sense? Now, this is one way you look at it. This is one way you look at it. Another way you look at it is if price comes, gives you a sweep of a low and break. A lot of people want to buy it here. Remember, this is your order block. Gives you this. A lot of people want to buy it here because of this sweep reconstruction. Now, market fails it. These two, please, I hope I'm not confusing you guys. These two, which one do you think is more valid? Please, who will answer that question for me? Please, ASAP. Let's do this. Which one do you think will be more valid? Am I getting any response? A or B? A or B? Is it that you guys are not hearing me? Eh?
The B, sir.
The B, okay. Someone said the B. Another person, please.
Hello?
Another person, please. I can hear you, Mr. Ayuji Lola.
Oh, okay. So, liquidity, we are saying that I can say B, but A is our normal head and shoulder patterns, stuff like that. Yeah.
Okay. So okay, let me tell you why B is more valid, because now this is what happened in B. I'll have to clear my chart again now because I'm starting afresh. Now, market gives you a break of structure. Everybody wants to buy it here. Market comes and just started pushing to the upside. Do you think you will be very confident to want to buy it here? You will not be more confident than if price does this, breaks your zone, and this. You'll be more confident to buy it here because price has swept and break. You say this is a valid low, and price now comes, take you out. You don't need to panic. This one take out like this. It's not like this cannot work, this can work. But with this, take note of what I'm saying. With this, you have to wait, be patient to wait for an inducement. So giving you, this is now your A point, this is now your B point, and you now wait for your C to take out this. But this, you can do this straight up. Because what? This already is a valid, this triggered a lot of people to sell, a lot of people to buy because of this, but failed. You understand? This zone like this, you can come here and sell like this without even coming to your order block. Do you get? So it's not like this one is not still valid, it's valid. You would love to wait for this, but this one is more valid because it tricked a lot of persons to buy it and failed. So the normal thing they're supposed to do is to buy it. Where did they enter the market to take them out? They force the market to sell here. So they need to mitigate back and sell normally. How this makes sense? Should we go to our chart? Is this making sense?
Yes, it's making sense.
Okay.
Yeah.
Okay, all right, all
Can
right.
go to chat.
Okay, all right. Now let me do a graphical illustration. I think someone chat. Okay, yes, it's clear. Okay, amazing. Now, a valid A came, price gave you a valid A. Let's say your valid A came in this form, right? Now give you a valid B. So normally you don't want to map this I as a protected. Obviously, this is where the major break of structure happen. So you are seeing it as one leg. Then this is your B. Now, what a lot of people will go and do is to go and be mapping Orderblock. That's why they are set of fail. Instead of mapping out a mitigation block to sell from. Is this idea making sense? Your valid A, your valid B, your C. Remember your range is from here to this C, 50%, half of it. So instead of you to be waiting for another block here, you can sell it here. Now, this is where it becomes more tricky. Price can, if price does this, can you guys hear me? If price does this, price came into your zone, sold, and pushed. Now, take note, this is where your original sell was supposed to start from. This is telling you that almost since this seller failed, you are not, this sell is not supposed to fail. So this sell failing is telling you that this high might take out. So instead of selling, what will you be doing? You'll be buying here. Now, if price has not entered your zone, you can buy it into that zone just to be safe. You can buy it into the zone. But you need to be careful, or you need to watch your trades. And if price now breaks, you can now wait for inducement and this happens. Sell it here. But if this fails, most times know that this is going to buy. That's why sometimes when a lot of persons send a setup like this, let me do a good illustration. Send their setup, everything is intact, their order block is intact, price comes, react off it a little bit and push. I don't panic. What I will do is I will buy it here. What is this block? What do you think is this block? Is this a mitigation or a violation block? Who can answer that? Now, can you see the difference between mitigation and violation? Violation is violating your setup, your valid setup. This one is not your setup. Mitigation block is not your setup. This is where you wanted to buy from. Price comes, take it out. It's kind of a violation, but this is a mitigation block. But now your setup, you have a setup like this. Price comes, does like this and fail. This is a violation block. This one is more powerful than this one, because it's as a result of a failed setup. So the way you trade it is, if you see a failed setup, right? Please, you guys should go and check our trade that we are on. What's it doing? So if you have a failed setup like this, price comes, you don't need to panic. This is your area where you want to look for sales from. This is what we call flip zone. You flip it to buy. The only reason you will not buy is if this happens, right? What will you now do? It has flipped, this zone is still valid. You wait for inducement and you sell it here. That's the only reason you will not buy this buy if this is taken out. And if this is taken out, you will now continue your sell. What will this represent? There's a lot of hope is not confusing. Hope is not confusing you guys, please. The difference between violation and mitigation.
Yeah, I believe by the time you show us on the charts, it will also be more solidified.
Which kind of treatment is this? Let's just continue. So now, this is one example. Another example is if price gives you a valid setup, comes there and fail, right? And price comes here. You know you wanted to buy it here, but price what does this directly without coming back into this your zone to give you sell. What would you expect now? This is not your valid A because it swept liquidity before pre-construction. You wait for your B, and this is going to happen. Drop. Coming into your violation block. But this one, it was, let me just do it like this. This one, everything that is happening here is like this. This is different from this. This one has completed the break of structure. This one did not complete it before it came to your entry and you sell it here. But this one completed the break of structure before coming back into the violation block. So let's go to chart. Let me show you guys. Say V50 minus the example, the trade that we took. Yahweh, you are the sovereign God. You are my King. Yahweh, you are. Please don't be confused. I don't delete. Should I delete everything? Okay. I think I should delete. And just remove everything and see if I'll see. You know, the way this thing works is that if you don't do it, you know, you might not see it. Now let's see this price action. Price swept, give you a break of structure, give you a second break of structure, right? Now what happened? Returned. You know, you'd have been expecting this to happen. Sorry. You'd have been expecting this to happen. But it never did that. It gave you another B, leaving an imbalance in price here clearly, and say that large candle printout. So this is now, who can tell me which block is this? Now I'll have to take this out and map it out very well so that you will not be confused. Now this was your break of structure. Right. Now this is your sweep. This is your break. This is your valid A. This is your B. Now, before price broke your A, it did this. Before price broke this place, it did this. It came, push, came down, did as if, oh shit, I'll send in another link. Did as if wanted to buy to the upside and fail. Now, you guys don't be confused. It did not break out. This was something like this happened. It did not break out of that low before it pushed, before it now broke. So this is a what? Mitigation block. So this is your mitigation block. Then price now came and gave you a retracement that is not up to 50%. And price needed to, a lot of you will go and map out other block. But between the order block and the mitigation, which one of the price coming to mitigation? This is why I said this one, you need to require an inducement. You can clearly see that price gave you an inducement to use, and price dropped off from your mitigation block. Always check for your mitigation block first. Check for your mitigation. If there's mitigation, don't even go for order block. This is what happened. This thing, you need to go and practice it very well. Yes, sir. Yes, sir. It's clear. Mitigation. Patrick, what are you asking about mitigation, please? Okay, you are saying it's mitigation. Okay, I get you. No problem. So that's the idea. That's the idea. Now, let me show you guys something. Where did this price react from? Go and tell me. Did it come to the order block? Never. Before price broke structure, it did as if he wanted to buy. That means a lot of persons were deceived by this buy and it failed. Price induced, gave you an inducement just before the zone, price will do what? Drop. So you will not see it as, if you want to look at structure wise, you see it as this is your valid A, this is your B, and this is your C. You know, but you need to look internally to see what happened in that place and sell from. Yeah. Do you understand? Sell it there. See how price tanked. Now that's for mitigation block. Let's look for a violation block. Let's look for a place that our structure was correct, but price violated. Let me see. Look. Okay, yeah, V25. Don't forget that trade. I can never forget that trade. This is a violation. Sorry. This is a violation. There was a break of structure to down your protected I, your valid B. So everybody wants to sell it here, right? Sell it. What happened? Price came, did as if he wanted to sell. It came, pushed, and failed like this. What will price do as it has failed? You don't need to panic. This area is where you want to wait for price to come back into and buy. That's why I told you guys that I'm not good. In fact, I'm seeing a buy trade here on V50 and V25 because a lot of people want to sell it here. I knew that will induce a lot of persons to sell. But me, I'm buying. So now this is a violation block. This is different from what we just did about mitigation. Now let me show you guys some more. If I will see sharp. Okay, this is a violation. Go ahead, please.
Oh, I wasn't too clear about the V25 violation you just showed us now. Maybe because you quickly draw it. Can you just do the way you usually
I'll show you a graphical illustration there, show you again. Now, a violation is when you have a setup. And this valid setup, it failed. He did as if he wanted to sell, sold for some time and failed. As it failed, you don't need to panic, just do the opposite. But now, in a scenario where you have your valid setup fail, and price now comes and fail again to the down, break to the downside, you don't need to panic. You just wait for price to come back into, give you an adjustment and come back into your violation block and sell. This will now be your protected eye for the structure. Now let me go to the chart and show you what I saw and what happened. Now you had a sweep here, a protected eye, a break of structure, a retracement into 50%, giving you a valid P, and everybody want to sell it here. It sold for a while and push. This push.
Please, sir, can you use your normal tools? This one is confusing to me.
Okay, all right. That one is quite faster, that's why I use it. Now you have your sweep, break, broke to the downside, then price came back up, retraced into 50%, came down. So everybody wants to sell it after it takes out your B. Everybody wants to sell it, but price came, failed to the upside. You don't need to panic, wait for price to come back into the zone and buy. So here's the zone, here to here.
Okay, it's clear.
It's clear, right?
Yeah,
now,
thank you, sir.
The only reason you will not sell from a mitigation, because then before I forget, let's say you have a mitigation here and price already came and mitigated it like this before price gave you a valid B. Let's say with the structure was just quite messy, something like this. This mitigation block have been mitigated before it broke finally massively for giving you this B. You will not want to sell it here again because what? This is now liquidity. So you wait for price to push, take it out and drop. So if you see certain scenarios whereby I expected I think it's still V10 less. Come, my account never go blue. So when I do mentorship. See, V91 is not my sharp. We go again. So that's a trade that got to about $13, $14 profit. I just said let me not just close. Think yeah, let me check for my violation. Okay. Here's it. Where did I see this trade from? Okay, something like this. Sure. I hope you get the idea. He reacted a little bit and gave an inducement and it sold very well. So this has already been mitigated. So even though price gave you an inducement, you will not want to sell it here because it has been mitigated. I hope the idea is clear. So price took it out nicely without even retracing. You can clearly see what I said about that. I don't know if I can see more examples. Let me see. Just have 1 minute left. I'll send you another link. Okay. Something like this. This is a mitigation of the mitigation block already. So it will not hold price. It's now liquidity. You can also use this to know your liquidity point. So price will obviously come back to the other block instead of using that. Because if you use your line, price kind of wanted to sell from that place, but push down and push up back. Price came, tapped it. So upon that tapping, you don't need to sell from buy from there again. You need to wait for it to be taken out. Push. I hope it makes sense. This class is ending now, so let me wait and create another link. Any question before I go? I think
the V91S is coming